Okay, I'm gonna make a big statement now, which is I think NIO has a chance of beating Alibaba in the area of e-commerce. And yes, I mean it. And in this video, I'm going to discuss where this thought is coming from, what it means for the future of NIO, and along with some other NIO news. And I'm also going to talk about the earnings of ZEPP and maybe some thoughts around what's going on in the crypto space and Bitcoins. So it's kind of a longer watch for the weekend. Make sure to watch it till the very end. I'm gonna make it worthwhile and full of information. So if you appreciate that, please smash a quick like and then let's dive into it. Okay, so the news is that NIO has opened NIO Live, an e-commerce store on Alibaba's platforms such as Taobao as well as Tmall. And if you watch this channel closely, you may know that I'm quite bullish about the prospects of NIO Live and NIO e-commerce. And now they're making additional steps into the space of e-commerce, so expanding NIO Live not only from the offline, like NIO houses, NIO spaces, but more towards the online fields. But what makes me say that they could actually beat Alibaba, which is the Chinese e-commerce giant, right? So well, this goes actually back to my own experience of founding our company Dongxi, which actually was started in the area of cross-border e-commerce. We were selling goods from Germany to China. And what you can see here is our TV appearance in a Chinese Dragon's Den, basically pitching our startup, which was basically our standalone app called Dongxi, which we launched in order to help German companies, like small and medium-sized companies, to make a market entry online digitally into the Chinese market, selling their goods to the Chinese middle class that wants now to upgrade their consumption and now really wants to enjoy some quality products coming from overseas. So when starting up with our e-commerce platform between Germany and China, we obviously also did our homework in terms of looking what are competitors in the field, and of course all of the Chinese platforms such as Alibaba or Jingdong, like JD.com, they all offer similar types of services. But we noticed that they're actually not suited well in order to cater the needs of, for instance, European companies, because the onboarding of selling to Chinese consumers is A, very expensive, and B, it's super hard to actually reach out to the customers that you want to reach to buy the products and, make a brand building and marketing in China. So although the market is really big in this cross-border e-commerce field, but the solutions today are kind of not ideal. And even Alibaba today really struggles to bring Western brands to China via their e-commerce services. It's still a hard business, but on the other hand, it's also still a business in its infancy. Now, what could NIO Live bring new and fresh onto the table here? So as you can see, the products are kind of a little bit of a Western style, of course, very design, upper class, premium, in collaboration, for instance, with artists or other brands that we know already from the West. So that's the concept behind some of the products and the brands that are in this NIO Live ecosystem. So what does it all mean, and how can NIO be actually better now than Alibaba, despite actually listing on this Alibaba platform? Does this all make sense? And as I mentioned in this intro, I do think that the Alibaba platforms are kind of not ideal for this cross-border e-commerce field. So my summary would actually be that Alibaba has kind of failed in terms of developing this cross-border e-commerce business to a size that would be viable. They never really managed that people in the West are actually buying on Alibaba platforms, and on the other hand, they also never really managed that Western brands become super successful on the Chinese e-commerce platforms that Alibaba is running. So yes, my thesis is that NIO could be the first player that actually solves this product. And why is this? First, NIO has exactly the user group which I think those Western brands want to cater. So NIO has built this quite international brand that is rooted in China but has this international appearance, and it's catering directly to the needs of those new middle class wealthy Chinese that want to buy a car that is, well, it's Chinese made, but it's super modern, it's the latest tech. And they are gathered in this group, in this community in NIO Live that is for now hosted mainly in the NIO app. So that's why NIO is more than a car manufacturer, because essentially what they do is they group lots of people, like-minded people, social peers that are in the NIO app. They use the app not only for the car functionalities, but much more, sharing a common lifestyle. And obviously that also translates into e-commerce opportunities. So basically, a car buyer for NIO is just a new app user, and the car is just the install base for what's to follow in NIO Live. And it's also noteworthy that NIO has more than 20x the app users than they actually have car owners. So it makes the impression that NIO is actually building a big brand here, and more people than only the car owners are actually interested in becoming part of this community. And therefore, this is a huge asset that NIO will leverage over time. So now NIO has chosen to also open this e-commerce store on one of the Alibaba platforms. And as you can hear from my comment, I'm not particularly a fan of these platforms, and I don't think that this will actually drive the major amount of sales for NIO, to be honest. And by the way, just a fun fact, but here you can actually see the sales numbers. So this has only been launched this week, so obviously the numbers are still low, but it's one of those specialties of Chinese e-commerce platforms that you can actually see the sales numbers for each product, because actually, yeah, that's used for trust building. So I'm not expecting that NIO is now doing tons of sales through this Alibaba e-commerce platform, but it tells me two things. Number one is that they're now actively pursuing this e-commerce strategy, and that's actually a big part of my business case 2.0 update that I've already shared with my patrons. I think by 2030, so in this decade, NIO could actually make more than 20 billion in annual sales, and that's around 10% of the future revenue streams coming from e-commerce. And that's based on the assumption that NIO will grow their e-commerce business in a fast rate as they are selling more cars. But I think they will be looking to keeping this ratio between car owners and actually app users or NIO Live users in the same way that they are doing now. And that will result that NIO will be actually becoming kind of a niche e-commerce platform. I think NIO could reach more than 150 million users in the end in their app and this NIO ecosystem. And this would be the size of one of the major European e-commerce platforms, similar to, for instance, something like Farfetch or Zalando. And that means that NIO is actually having, one of these big valuation assets inherent in the business model, which is about the e-commerce revenue streams, which I think in the target group that NIO is actually catering, it will be quite premium, high margins, and quite sticky, to be honest. So the second thing this move to Alibaba actually tells me about NIO is that they are now, fishing in this big sea of existing e-commerce platforms for new users. Because for now, obviously, the question is, how do users find actually the NIO app? They need to download it. I mean, there needs to be an incentive. So they would actually need to find the customers somewhere, pay for marketing, pay for advertisement, and so on. And I think reaching out on some of those e-commerce platforms might be actually a way of being listed organically, because now these days lots of internet search actually happens in either in WeChat or on one of those e-commerce platforms like Taobao and so on. So if NIO is listed on those platforms, that makes them naturally that they can be found, and new users can actually, or new customers, potential customers, can discover the products, NIO Live and so on, without actually having to buy the car or such, but maybe ultimately, download the app, or maybe they just first purchase one of those products here on these e-commerce platforms. So basically, it's a new way of generating users, and ultimately that could actually even convert into car sales as well. On top of that, maybe at some point they even opt to selling cars online. Many Chinese companies actually are selling cars online already. But as mentioned in the beginning, I'm not a big fan of those platforms at all. I think it's a good way of making this approach of finding new customers, but I'm not expecting a major amount of sales coming through this network. But the bottom line is that I think NIO could actually now beat Alibaba at this home turf, in fact, of doing cross-border e-commerce, because I think many Western brands want to be listed either on the NIO app for selling their products, having access to this unique target group, or even being included then in NIO store in the Alibaba ecosystem. And also think about it, I hear so many comments about Westerners wanting to buy some of those NIO Live products, and I think NIO could also be one of those first companies that's getting used by Westerners to buy Chinese goods, because for now it can be still quite not so pleasant journey of actually buying from China. You would usually do that through Amazon, but oftentimes you don't even know that it's a Chinese merchant or seller or vendor behind it. But in the case of NIO, it's quite obvious that you will be buying from a Chinese platform or a Chinese brand here, and notably you actually want a piece of the NIO brand here, and that's what's so exciting about it. I think that NIO has built this brand, this premium aspect that caters both to this Chinese audience, but at the same time to the Western audience, at the same time to the Western merchants, and at the same time it enables NIO to actually come up with self-branded products and their own ideas, but also in cooperation with some of the major brands. And I'm probably going deeper into that in the future, but I mean, there's so much business opportunity around it. For instance, all of those agencies that usually help Western companies to sell online in China. It's a huge business. There's different ways of making revenues through actually having merchants pay to be listed on the store, having a transaction fee cut, and so on. So lots of opportunities in this area, and I think NIO is well positioned. And the moves with these weeks opening of this e-commerce store actually shows me that NIO is taking it seriously, and it should materialize in, well, let's say 12 months out. I think we will see the other services business of NIO taken off, and that's what I'm looking for in the years to come then, obviously. So it's good to see NIO executing on that front, but then there's something more which has to do with one of the comments that I just recently got here. So Daniel Trost from Hamburg is asking around battery as a service, and now that he sees that other companies are actually starting to use swap technology, what are the implications for NIO in that? And once again, Daniel, this is already in my business case 2.0 that I have published in my Patreon network. So if you want to download the Excel file or see my long reads on that, which I write weekly, then please consider becoming a patron. And in that, I actually calculated and made assumptions around NIO actually receiving license incomes or royalties, because I think what they're going to do, they have patented all of this swapping technology, not only for the technology within the car, but also for the battery swapping stations itself. And I think they will have other companies pay for being able to using those patents, and also paying for maybe being able to using the battery swapping stations and so on. So I calculated those revenues, and once again, these are potential billions of revenues in the future if that really works out, that other companies are joining it. As mentioned in this comment, yes, Renault is actually considering it. We also have some rumors, but that's early speculation, that actually Ford is going to use it with the 4 Mach-E in China. And I've also already leaked some pictures about Ford and NIO collaborating on the charging network. So it's maybe not too far off, but I would actually wait a little bit with Western companies joining the battery swapping technology. I think it's right now rather the Chinese. So for instance, SAIC, which is the Chinese joint venture partner of Volkswagen, is considering, actually they have actual plans to introducing battery swapping for the entire builds of their lineup until 2023. So that's only for the Chinese cars, not the ones manufactured with Volkswagen so far. But still, these are some signs that now other companies join and adopt this technology as well. What I'm personally really waiting for is that also some of the bigger players is actually joining the battery asset management company that NIO has founded with, for instance, CATL and other stakeholders in China, which they are fundraising with public or private equity investors and so on. But it would be really cool to see also others joining that, and then also, sharing the development regarding the battery packs and so on. I think that idea is quite huge. Li Bin here outlined that he's actually thinking of that this could be $1 trillion RMB business opportunity in the future. It's, of course, right now it's all speculation. So take that with a pinch of salt. We're not there yet, but now with those news around Renault, Ford, but also the Chinese players that are adopting it now, it seems that there is some reason to believe that this has actually some legs, really. Now let's move on to ZEPP Health, which just had their earnings, the Q1 earnings call, and the earnings have been published and so on. And I haven't made a catch-up so far. I only made a post around the earnings, my personal take and so on in the Patreon network. The stock itself got absolutely crushed, even after selling off around 50% already during the tech sell-off, and also those seasonal fluctuations, which I have recently pointed out in another video. And after the earnings, in which ZEPP Health actually reported a net loss, the first net loss actually since quite some while, they have absolutely sold off minus 13% after earnings. So let's look a little bit into it. How bad are the numbers and what it means for the future, and also personally about my position in ZEPP Health. And speaking of that, I have to correct a statement that I made in the last video. I mentioned that my actually average in ZEPP Health is around $9, which is a wrong take. Actually, it's 9 euros, so that translates into $11. So I'm obviously also now underwater with my position here. But now let's first look at the earnings, and then I tell you more about what I will do with my position. So as you can see, the gross margin has recovered in Q1, so that's one of the positives around these earnings. So whereas in Q4 the gross margin was even below 20%, it's now almost back to 25%. So we see a change in this downward trend of the gross margins. And notably also the sales prices, the average sales prices has increased to a record high of $27.8. And this has to do with the fact that during this quarter, ZEPP has massively increased the self-branded sales of the products for ZEPP as well as Amazfit, and less so of selling the Xiaomi, the Mi Band 6 and so on, which has been kind of postponed or will be sold mainly in the next quarter. So as the average prices of those self-branded products are higher, we are seeing this record here. Also notably, the unit sales have been low in Q1, but that's always the case. They are higher than the previous Q1 quarters, like the first quarter of the year, but that's seasonally always quite bad. And they're guiding for a second quarter, which might be more than $250 million, so that's quite bullish. And then the dots here, you can see my estimations for the rest of the year. So usually towards Q3 and Q4, the sales are increasing, then peaking, and then should be dropping again for Q1. Now these things, the better gross margins, the higher sales prices, and also this Q2 outlook are actually quite bullish things, right? So why has it sold off? Well, one of the reasons might be just that they reported a net loss, which was kind of not expected. But I think if we dig a little bit deeper, we see that the problem here, which is the sales and marketing cost per device sold, that's the blue line, and also the SG&A per device sold, both have been increasing to record levels, which is ultimately the problem that ZEPP is now facing as they are kind of trying to become independent from Xiaomi. They are now rebranded as ZEPP Health, so also focus on their self-branded devices, of course. But that also means that they cannot access the Xiaomi sales channels like for the Mi Band 6 that is selling easily through the Xiaomi sales. But instead, for the new brands, they need to build out their sales network globally, and that is obviously also costing money on the sales and marketing side. And that is the big issue right now for ZEPP, whether or not they can actually succeed of building this brand globally, succeed of selling more of these products which have higher gross margins and higher revenues. So that's actually great, but it's also costing them more money. So my take for now is actually that I wouldn't be too worried about the net loss currently, because they actually guided for the next quarter that they will actually become profitable again. And that has to do with the fact that actually also next quarter they start selling the Mi Band series again. So with this Xiaomi partnership. So also the mix will be increasing again for the Xiaomi sales. So currently it's only been 30%, so that's a massive low. Usually they will be selling 70% of all of the sales they're making will be going through Xiaomi, but this quarter it was only 30%, and in the next quarter it will be roughly, I think, around 55%. So it's becoming, more equal, and what we can expect then is actually that in the next quarter those Xiaomi sales help to kind of subsidize the expansion of going overseas. And that should actually be also the long-term trend that Xiaomi sales are picking up again. They may reduce the share of Xiaomi sales over time. So now it's been a record 30%, might be higher in the future again, around 50%. But ultimately, over time, we may see this fall way below 30% if ZEPP succeeds with their self-branded products. And I think they possibly have a good chance of actually doing that in a profitable way, but still, it's having a bad effect on the profitability, the gross margin implications, and so on. And unfortunately, that's all that the bank analysts in the earnings call are listening towards. So that they only have their Excel sheets in which they type in those things. They only see ZEPP Health as a manufacturer of devices, so they compare it and benchmark it with other product manufacturers. And that's why ultimately, given those lower margins right now, the phase in which ZEPP Health is in right now, why the valuation is so low, incredibly, in my point of view, actually ridiculously low. I've actually been doing some calculations in background and looking at the growth rate and the guidance and so on. And to me, it seems like ZEPP could be growing well above 30% year over year in 2021. So it would give them more than 1.2 billion in sales. And with a company, I think, what's the market cap now? Below 500 million or something. This is really, not a fair stock price in my point of view, but that's the way the market works. As I mentioned before, I'm now also kind of a back holder. I have my ZEPP shares, which are down significantly, more than 20% down. And usually how I think of such a position is, and that's nothing new to me, most of the investments that I've done in the past first went down up to minus 50, minus 60%. I was down on that so much on NIO as well, on Futu as well, on Tiger as well. And usually when it's down around minus 30%, that's when I start cost averaging down, meaning buying more of the shares in order to lower my average purchase price. So in the case of ZEPP, that's not applicable yet. I'm down more than 20% right now, but not looking to add currently. And also, to be quite frank and honest about it, I'm really not happy still with the way that the management is communicating kind of the overall strategy. I'm missing the point where ZEPP Health really guides the analysts and also the general public into the perception that ZEPP is much more than just a device manufacturer. Now they made the step of saying like, well, ZEPP is actually a premium or higher price point manufacturer. They not only have the cheap Mi Bands, but now they also have this fresh and stylish and young brand for ZEPP. But the missing point is still how they make use of the data, what they're going to do on the service and the software side, what they're going to do with this acquisition of Yitong, how they're going to build the medical business and so on. Nothing new in the earning call. Of course, also the analysts didn't ask the question, but I really expect that the company is going out and starting to communicate to investors, because frankly, otherwise there's just a lower chance that actually ultimately there is a revaluation of this company going on. But as mentioned before, on the fundamental side, my business thesis hasn't changed in terms of that I think there is a huge opportunity with ZEPP Health for, let's say, 5 years down the line. I also think they are strategically really interestingly positioned. My big question mark is around the management and the team. Can they execute? will they really go down the line and down the route of what I'm personally seeing in this company? If that's not the case in the future, of course, there is opportunity cost. I could invest my money elsewhere, or I could finally say it's time to part with this company, because I think that they have low chances of succeeding in building out this bigger vision. And so for now, well, that's the way it is. Sometimes in the early stages, it needs a couple of quarters and years even to go into the right direction. So far, I'm planning on holding onto ZEPP for this year and see what they will be doing in the area of insurance services, medical health technology, and so on, what they're going to do with the Etherium acquisition and so on. Will they come out finally and answer our questions or my questions around the bigger vision of this company or not? And if there's a bigger dip, I may actually consider to averaging down. And otherwise, if they don't make the right moves, then it's finally time to cut the losses and be honest with myself and saying like, well, this investment didn't work out. And then last but not least, the topic of cryptocurrencies and what's going on in that space. You guys know that I am holding Bitcoin and a small piece of Ethereum. I'm hearing lots of hype and buzz around Ethereum, and the price has been actually skyrocketing in the last couple of days and weeks. So it's either a catch up with Bitcoin, and interestingly also we see that over time Ethereum has actually outperformed, I think, the Bitcoin price. So it's an interesting proposition there, whether or not to doubling down on Ethereum or so. And then also the big question with Elon Musk's comments around Bitcoin, the environmental concerns, and whether or not now Bitcoin may face more headwind or issues with institutions not buying into it anymore. For now, I'm not feeling ready on jumping onto something like Doge, which is kind of getting hyped by Elon Musk. I think that I'm hearing arguments which are kind of making sense now around SpaceX being paid in Doge, making it an interplanetary currency in a way. Having Doge as a way of being less energy consuming, but I have really question marks around it. First of all, I think Bitcoin is not as bad environmentally as it sounds like. Of course, it's consuming lots of energy, but so does the fiat system. And I simply think that there is no alternative when it comes to decentralization and security that Bitcoin can offer. And for me, this value proposition is quite big. That's why I invested in Bitcoin as an asset in terms of being kind of a digital gold in my views. Not so much, I never said I want it to be used as a transactional currency. So I can see the argument around that we need something else possibly for transferring funds, but that doesn't diminish the prospects of Bitcoin as an asset class. That works well through something like inflation fear periods and so on, but also in general for diversification. So just listening to some of the Bitcoin talks, and also I listened to an ARK Invest Twitter Spaces, for instance. It sounds to me like maybe Ethereum could win in the short term right now in terms of some adoption when they are, for instance, switching to proof of stake. But I'm feeling not ready now to actually commit more to this investment for now. I'm happy the way it is, and I'm closely watching also what could be happening with Dogecoin. We always need to think about, like Elon Musk, he may have a bigger picture here somewhere. And although this guy is a little bit crazy, of course, you need to take it serious if he is pushing something like Doge and, combines that with interplanetary travel and so on, as stupid and crazy as it sounds. And on a technology perspective, it doesn't make much sense with Doge just being a fork of Bitcoin. And also, if there's more adoption, it will also consume more energy and so on. But definitely a space to watch closely for now. And I think it could also be now that we are kind of in a period where Bitcoin may struggle a little bit for now in making the next move. So expect some real pressure on Bitcoin until this kind of discussion has been solved in a way. But ultimately, I think Bitcoin still will be running from here on a long-term perspective. If you look at the recent super cycles, we always had a little bit of a cool down in between before it even went higher. And then definitely there might be actually a bear market following or a huge correction, for which I'm not sure yet whether or not I would consider profit taking by then and going back in later. But personally, at the current stage, I think Bitcoin is kind of, there's not a need for an exit strategy. Bitcoin, in my point of view, is the exit strategy. With all the money printing and inflation and the influence by government and so on, I think a decentralized cryptocurrency like Bitcoin is really in high need, and it's something that is very powerful, and it could be really like the early days of the beginning of the internet on what different applications could be built on top of that. All right, I covered lots of different topics for now. I hope you enjoyed that one, even though it's a longer watch. So thank you guys for watching, and see you in the next video.